Hello traders, and welcome to another edition of StrayDog's Bigger Picture weekly videos. If you want to find out more about me, link is in the video description, but now let's start with a video in which I'm going to cover US markets, dominantly S&P and Nasdaq, going through the daily, weekly and monthly charts, and also a glimpse of Russell and Dow Jones. Now this is daily chart, market is way below daily 200, had a very big drop on Thursday and especially on Friday, making a 99 points gap down on Friday. Now this was a true gap down and a size of a daily 8-year move. Nothing bullish is going on this chart or on the weekly and monthly charts, but let's think about potential supports and where this particular market could go in the future, in the near future. But also to point out that the drop didn't start after Trump speech on Wednesday. It started actually way before. And the first warning sign for everybody was marginal higher highs with bearish divergence, which market made up there. This would be December high, January high, February high. So all-time high and January high were made with bearish divergence. Then market made a balance, it broke down. Another bigger balance also broke down, then got back tested here. So all-time high as marginal higher high with bearish divergence, followed by this here, which happened on March 25th. In this area here, we had a downside scenario. It was covered in the previous bigger picture videos. More about this, link in the description. There was a downside scenario, and the down move in that scenario was aiming toward the September low, which was reached on Thursday and then heavily overshooted on Friday. Now, what happened here, for example, is something that could happen in the future as well. This is the default way how many markets are making swing lows. As a poke below the previous swing low, like a look below and fail, and on regaining that level, up they go. We can see here that that up move died at the previous support, which was acting here and here as a resistance. So the same thing could happen with some of the supports that we can find on a downside. I think that August low is a prominent swing low, and he showed that in previous videos, and I will show you that in this video as well. As we can see, market closed below that, and we got decisive close at the lows. So what is the odds that market could regain this level fast? I think odds are pretty low for that, because there are markets that are already in the bear market territory, like Russell and like Nasdaq 100. And the S&P is down currently around 17.5%. So a scenario of this, that they now regain this level and up they go, is a, I think, lower odds scenario. And even if it happens, it's going to find out resistance here at this gap. And you can see how top end of the gap is neatly in line with September low. So I found this as a potentially serious resistance. Now, on a way down, there is swing low, this one from April 2024. However, I don't really find this as something that is all that important, although market can obviously bounce for that. But personally, I think that January 2022 is much more prominent and much more important, and I will show you why on weekly chart. So this is a weekly chart. As said before, market so far around 17.5% down. This is August 2024, this is January 2022. This would be that level of importance, area of importance around 4,800. And it is much more clear if we go up now a notch higher to the monthly chart. So this is monthly chart, and what I found interesting here, and why I will put my eye there on area around 4,800, because there are actually 4 references there. There is a monthly 50 there, and you can see how monthly 50 was a support here. This is 2016, 2018. This spike below was on a Corona downside. Then this here would be October 2022. and this is under the halfback of this move. Then level, which is around 4,819 as a third reference, and the fourth reference would be trend line from Corona downside low connecting October 2022. Now, you see that halfback is right at the level. Halfback on an S&P monthly chart is very important. Why? Because we already had a halfback retrace. Here would be that retrace. See this retrace. It was right to the halfback with the monthly 50. So again, here would be that new halfback. And if market continues to the downside, this moving average could obviously go higher a bit. So around that area, we could actually have confluences of four references: level, trend line, halfback, and monthly 50. So I think this is a significant area, but also know that this is a monthly chart. So if market goes down to 4,800, this absolutely doesn't mean that it must bounce from that level to the point, because we are talking about monthly chart, and market could make the same thing like it did here. Poke below, up they go. Now this is a daily chart and the level was 5,505, and market made a 16-point move below. 16 points, 20 points is nothing on a daily chart. It is a catch for scalpers and for day traders, but nothing on a daily chart. If 20 points is nothing on a daily chart, how much is nothing, under quotes, on monthly chart? Market could actually go, for example, to 4,700 to test, for example, the monthly 50, and then to regain this level. So this is the area, and this is the area to watch on a down move. Again, first scenario would be regaining this August swing low, up they go. I think that is lower odd. I think due to the fact how weekly and monthly charts are looking like, that it is bigger odds that the market would actually go lower and at least tag the bear market territory mark of 20% to the downside. That is likely not going to be in line with any of the levels from your daily, weekly, or monthly charts, but just the fact that S&P is tagging 20% from the all-time high could be a reason for a bounce and for short covering rally. Keep that in mind. Now let's go and observe Nasdaq. This is Nasdaq on a daily chart. See this. This is that March 25th when S&P, let's go back to the S&P, that is here, when they backtested the level and went down below daily 200. About Nasdaq, they also tagged August low and closed below, slightly below. Also have a very big gap down behind. So again, similar scenarios, regaining August low or going down to bigger level, and that bigger level on Nasdaq would be November 2021. Now, unlike S&P, and there is no big confluences of several factors here. Let's go to Nasdaq monthly chart to show you that. So this is that level. This is August low, and this would be the trend line. So this trend line is way off than on the S&P. So for gauging what's going on US markets, I would rather use S&P chart than Nasdaq chart. This is also monthly 50, and you can see how Nasdaq entire time above it, and only here was poking below and regained monthly 50. About other markets, as you can see, Nasdaq is already in the bear market territory. Other markets would be Dow, which is down 15%. Also, August low would be here. It is below it. And Russell, which is in the bear market for quite some time and the weakest market of all. I think that they could actually test again this level here, which is around 1,650. Back to these bigger markets. So again, Nasdaq, we are looking down to November 2021 low. S&P, we are looking down to January 2022 low, with the idea that, hey, here we have confluence of upsloping trend line, level, halfback, and monthly 50. So that would be it about the technical part. And to finish this video, I'll just show you what are the scheduled data and earnings reports for the next week. Nothing on Monday and Tuesday, but then FOMC meeting minutes on Wednesday. This comes without the press conference, so I don't think that this is the most important thing. I think US CPI on Thursday is the most important one. Unemployment claims can also be important, and on Friday US PPI, University of Michigan consumer sentiment and inflation expectations, and new earnings cycle is kicking in, as always with banks, and all of these banks are going to report before the open. So that is what we are having on next week. Again, nothing bullish is going on these charts. Observe on all of these charts August low and these previous all-time highs. And in case of Nasdaq, that would be this level, 16,765. And in case of S&P, that would be the area around 4,800. That would be it in this edition of Stradox Bigger Picture Weekly Videos. And as always, I wish you a pleasant weekend and good trading.